Yeah, thanks, Tim. Look, great to be here, and thanks to ShareCafe, and what an interesting bunch of speakers you've had today. Quite a diverse mix. So for something different, we're going to talk about junior resources. Look, let me start by saying what we're aiming to achieve. So Bowen is, we've been an explorer. We're moving into development and production, and we're very, very focused on becoming the next significant independent coking coal producer in Queensland's Bowen Basin, targeting over 5 million tonnes a year of production by 2024. So let me just dwell on that for a minute, because it probably goes to a point you made earlier, Tim, in your introductions about ESG and what the responses of different companies are to that. So I guess it's important to distinguish between the types of coal that are produced, and not everybody does that, but we're very focused on metallurgical or coking coal, which goes to produce steel with iron ore. That's a very strong market. That's a growing market, and there's really no world in which that market doesn't continue to grow for the foreseeable future. So we think we're in a great segment. What the ESG sort of dialogue has meant, though, is that a number of the bigger players are leaving the coal sector generally. So there aren't too many of us left to sort of pick up the assets that some of the big guys are offloading. So we are very growth focused, and we're very focused on building a significant business with that opportunity in mind. Just on the target, 5 million tonnes a year, it sounds like a big number. Well, for those of you who aren't in the mining industry or aren't aware of it, that is quite a big number. As I say, there aren't too many listed peers. Coronado is one. They're doing roughly twice that as a $2 billion, just over $2 billion enterprise value company. So that's certainly our target in the midterm, and now we've got the projects to do that. So let me take you through a little bit of background and then where we're heading. I guess the company's changed quite significantly in the last couple of weeks. I don't say that lightly, but we've actually been working on these deals, one of them in particular, for over 2 years. But we announced last week the acquisition of a 90% stake in the Burton mine and the Lenton project, which is a high-quality coking coal mine and expansion project in central Queensland. So that includes 5.5 million tonne a year wash plant, a train loadout facility, accommodation village, and it comes with a large Taiwanese joint venture partner as well as a 10% holder of that project. So that's a transformational change for us. We've got a couple other projects I'll talk about, which are a bit smaller, but this is one that fits very well and allows us to get into significant production very quickly. On top of that, we also announced very recently that we are preferred bidder for the Bluff PCI mine. So PCI, another type of coal that goes into the steelmaking process, which is another exciting project. So that is licensed to do up to 1.8 million tonnes a year. We're looking to get that transaction completed and finalised as quickly as we can and get that into production ASAP. So those are the two new things we've done in the last couple of weeks, or announced in the last couple of weeks, but we've got some great projects that sit behind that. Broadmeadow East and Isaac River are two advanced smaller projects, but targeting combined production, ROM production between 1.1 and 1.7 million tonnes a year. Development decision planned for later this year, and final approvals in place at that point. We have a project called Hillalong, which we have 90% of, and Sumitomo, large Japanese conglomerate, is earning up to 20% in by funding our exploration, and then a number of other assets. I might just move to the next slide and talk about the team briefly. So it's a very experienced team, board, and also key management personnel who aren't shown here, but between us, we've opened 11 coal mines and operated more than 25 coal mines worldwide. I'm a relative newcomer to the industry, but my background, I started a company called Stanmore Coal in 2008. We listed in 2009. 2016, we bought an asset called Isaac Plains for $1, and we turned that back on again as a high-quality met coal asset, and that's now producing somewhere around 2 million tonnes a year. But I've recently joined, or in the last couple of years, I've been working with Gerhard, who started Bowen Coke and Coal. Gerhard is the MD, and he's had a long career in the industry, including as Exxaro of South Africa as their rep in Australia, looking at picking up projects in the Bowen Basin. So a very experienced guy. Matt Lattimore is one of the best coal marketers around. He's on our board and heavily invested in our company, as are all of our board. Neville Snedden, again, and Blair Sargent, very extensive history in the coal industry. Next slide, please. So in brief, what we've done is we've acquired high quality, long life met coal asset or set of assets. It comes with infrastructure, which has a replacement value of probably north of $300 million. Near-term production, so we're aiming to get the Burton Lenton mine going in around 12 months. And it marries in well with an existing asset we've got nearby. I'll show you on another map, but that's Broadmeadow East. And we're aiming to get that one going in around 6 months or so, subject to securing some third-party infrastructure to export that through. Material increases our resources and yeah, it gives us a great hub and a great sort of northern Bowen Basin presence. We did a $15.4 million equity raising. The rights component of that's still underway. That's underwritten. But part of that was a $7 million placement to Brian Flannery, who's a very well-known coal investor and former coal executive. Thanks. Next slide, please. Yeah, look, I'll just skip through this pretty quickly, but we've got this Burton Lenton asset is on care and maintenance at the moment. It's open pit, although there is some extensions and underground extensions that we'll target as well. But it's a pretty simple operation as an open pit. As I said, very large amount of infrastructure comes with the deal. Yeah, targeting mainly a high quality coke and coal. Granted mining lease, we need to do a little bit more work. We've got an EA, Environmental Authority, but we need to do a little bit more work on a final void plan before we start mining this. And Lenton sits up to the north there, which is an undeveloped open pit resource, which will feed through the same infrastructure. Next slide, please. So this picture just gives you a sense of where it sits in the Bowen Basin, right in the heart of the northern Bowen Basin. Some of the best quality met coal in the world gets exported out of here. Right near our Broadmeadow East project, we used to form part of this whole Burton complex and now will again. So we'll feed all of that through the same infrastructure once we get that tidied up. Next slide, please. As well as being very close to Broadmeadow East, it's also close to a number of other projects, including Hillalong, which is potentially quite a large open cut met coal project, and we can potentially feed that through the same infrastructure as well. Hillalong is the one where Sumitomo is farming into, spending the money on exploration there. We've recently hit about 9 metre seam and about 32 metres of very high quality coke and coal. So we're very excited about what that could turn into and could feed in some additional tonnes through this. Cabra is another small project which also will feed potentially through this infrastructure. Next slide, please. Yeah, so look, it's a great fit for us. Primarily coke and coal, great part of the world, ready for production, transforms us into a significant producer and really sort of accelerates that journey for us. The coal itself is well known in the market, 18-year historic production, very high quality met coal. Next slide, please. Look, just some snapshot of our other assets. Bluff, you can maybe see if you've got a good eye down the bottom there, is in the southern part of the Bowen Basin. We'll go to Gladstone, and we're building a nice hub down there as well with some other assets. But and our other focus is the northern hub with now Burton Lenton, Broadmeadow East, etc. Next slide, please. So here's the metrics of what we're trying to achieve over the next 2 or 3 years: is build this up to steady state production, running around 5 million tonnes of ROM and about just up towards 4 million tonnes of product. That's before we consider anything out of Bluff or anything that may come out of Hillalong. So, you know, that really does propel us into a pretty significant kind of production territory. The FOB costs are reasonably standard for that part of the basin, sort of north of 100, 120, 110 Aussies, plus royalties. We'll come to coal price in a minute, but hard coking coal sitting over 200 US at the moment, so the margins are very high, and this will, at current prices, this set of assets will throw up an awful lot of cash. Next slide, please. Look, I'll skip through this one in the interest of time. Let's perhaps head to the next slide. Yeah, so the development schedule, Broadmeadow East and Isaac River are some 6 months away, subject to final approvals and accessing third-party infrastructure. And then sitting now closely behind that are Burton Lenton, which will, we're targeting within 12 months to get them going. And Hillong sits behind that, and then our big Karura, big underground, is another one that we'll look to fund out of some of the cash flows we get from these early ones. Next slide, please. Just briefly on coal prices, I mean, a lot of conjecture about coal industry being dead. This will tell you it's far from the truth. Chinese coking coal sitting over 300 US. Steel price is very strong as well. Aussie Bowen Basin coking coal prime low vol sitting at 220 or so US. Thermal very high, 150 or north. PCI similarly very high. So we're very excited about turning on these assets at a good time in the met coal market. Probably call it quits there, Tim, and see if anyone's got any questions.
Got my glasses on, Nick. Obviously, you've got a very strong commodity price and the coal price, a bit like the oil market, right? You've got charging commodity prices and some serious challenges in the industry. How do you see the future of coal playing out?
Yeah, look, I'm clearly very bullish on it, but I don't say that lightly. I mean, I think if you look at all the reputable commentators, the forecast for the steel industry is substantial growth through to now in 2050, when everybody's talking about being net neutral in a CO2 sense. You're still talking about, I think the International Energy Agency is talking about a 30% increase in steel production by that time. And met coal will play a very big role in that. At the moment, about 70% of steel is made from coking coal. The balance is recycled steel, and that's really capped out because that's 80-90% of steel is recycled, and it's capped by the fact that in the last 40 or so years, steel demand has tripled. So even if you kind of scrap everything that's 40 or 50 years up, you're only going to get to 30%, which is about where we're at the moment. There's talk of other technologies, hydrogen, direct reduction. That's got some real challenges, and happy to chat through that as well. I'm not saying it's not something that we're kind of keeping an eye on, but absolutely, we're very bullish on met coal into the future. And I think the other point to make is that you can't build any of this, renewables or any of this stuff without steel. And at the moment, you can't build steel without met coal.
Yeah, good point there. Now, there's a question here on what are the best sources of funding to maintain a project's momentum? Does being an aggregator of coal assets make accessing funding easier?
Yeah, look, I think it does, and I think a bit of track record helps it as well. We've got reasonable access to capital as we need it. Certainly not as sort of as much as there used to be. But look, I think the listed market's still a good place to play. I mean, we've had a decent response to our acquisitions there. For equity and for debt, there's a number of sources. Some of the traditional Aussie banks are less playing now, but there's certainly international funds around that will still play in that space. So I guess this is what we do. We've kind of had a track record of doing this and finding the money for the right deals, and we'll continue to do that.
And obviously, you're just in the process of bedding down an acquisition, but is acquiring and consolidating, bringing these assets under one brand part of the strategy? And do you see those assets being kind of mispriced at the moment?
Look, I do. I think it's a great point. I think these things are changing hands probably too cheaply, and we'll look back at this and think, this was a once-in-a-generation opportunity to pick up some of the prime assets in the Bowen Basin. You've got the big guys, like BHP running a process to sell their BMC assets in the Bowen Basin at the moment. And there's not a lot of buyers, and people are just getting out for ESG or philosophical reasons, I guess. Look, we think it's a tremendous opportunity. It's part of our DNA is to grow and to acquire. We obviously need to execute well on these, turning these things on and bed these down, and we'll do that. We've got the right team to do that. But we're continuing to look and given the opportunity that sits there at the moment for us, we're continuing to look at and run the rule over things.
And politically, it's obviously an industry very well supported in Australia. Is there any trends you're seeing offshore that it means that the coal industry is going to be around and well supported by governments moving forward as well?
Yeah, I do think that you're seeing some jurisdictions are kind of less keen on it for various reasons. But you're seeing some of the Canadian projects struggle. New Zealand, other places where there's a bit of political heat. I think the reality is, we're such a big part of the Queensland economy, the Bowen Basin, and the Australian economy. With sort of $4 billion of royalties or north every year, and an awful lot of taxes and employment. That by definition we have to be taken seriously. And look, and I think the Queensland government and the federal government, all levels of government, to be frank, have got their head around the industry and understand why they should back it, and that we're part of the solution here, not part of the problem.
And moving forward, what should shareholders look out for over the next 12 months or so from Bowen?
Look, I think there'll be some more milestones around kind of completing these acquisitions, early, more milestones around final approvals and getting into early coal. There'll be a lot of news flow around all of that. As I say, we are still looking at a number of other opportunities, and heading for cash flow. That's really the key. At the end of the day, cash is king, and you don't have to be a magician to sort of work the maths on 5 million tonnes a year, making a margin of, I'm not in the forecasting game today, but let's say with coal prices where they are, north of $60 or $80 a tonne, is going to become a cash machine. So I think that's going to be the driver of the value in the long term.